I'm recording now. All right, Jinja, Trend Rebel. We're working on our indicators. Jinja is going to showcase his new indicator with pivot levels, internal structure pivots, and everything else, and show how that actually works to help us play price action in the market. Go for it, Jinja.
Let's go. Fantastic. Guys, excellent FOMC day. By the way, we call it on the live. I was just listening this afternoon to our morning call, what we said, what we were expecting. No change on rates. That happened exactly. Um, and then he was going to talk, and he probably was going to say some stuff that was bearish. That's what happened when he had the questions, and we just tanked. Okay, beautiful, beautiful day in the afternoon session. That was key, and part of it was due to our indicators, right? Our indicators up a lot. Uh, the indicators, what they do is they just provide you an extra leverage on the charts, right? Because the charts, if you look, that's the reason why I have a naked chart here with no indicators, just a pure price action. And price tells you a lot, right? The candles. That's why it's very important for you to understand how to read a chart with the candles and where your pivot levels are and how price reacts to those levels, right? I have nothing here, and you can clearly see where are we bouncing and we're rejecting depending where price previous had a strong reaction to it, right? For example, here I just pulled NQ, I could pull anything, but NQ here we had a pivot level. What happened? We came, we stopped everyone that had the stop loss there, we stopped them out, and we bounced. Okay, now we're coming here on NQ, and now we just touch it today, right there to the T. Are we gonna stop everyone out there tomorrow? We'll find out. Okay, but there are some indicators that really provide you a good input on the market. Okay, the most basic one, the one that you can look at the higher time frames, at the monthly, at the weekly, at the daily, that really doesn't lag, it doesn't fake you, okay, is volume. Okay, volume usually lets you, I need to take this off. Okay, volume lets you see what's happening in the market. Okay, you can see here, let's take this off, when volume spikes red, we came down. Okay, spike here again, we're coming down. Okay, so, and we can see, for example, we got Apple longs off of this. Okay, look at this. This is the daily. Look at the volume here on this candle. Look what happened after this. Look what happened. Okay, they got in here and boom. And usually, when you see volume like this after a big drop, this is when you can buy the dip. Okay, sometimes it's delayed. I have Apple on purpose. Why? Because here there was a nice spike. It was delayed, very delayed, and then it bounced there. Okay, so volume by itself is not enough for you to see if price is going to reverse, reject, bounce, or whatever, right? You need other indicators to help you. You have your patterns, you have your EMAs that we love, and you have the supply and demand area. You can call it support and resistance. You can call it a lot of different things, but at the end of the day, they are just the levels where the market as buyers or where the market as sellers. Okay, don't ever forget all this that we see here is buying and selling, buying and selling. It's a constant struggle between buyers and sellers. Okay, and this is why if you look at the charts, you don't see just boom this going up and with no, but look, we went up but down, up, down, up, down, up, down, up, down. Okay, market moves in waves. Do never forget that. Okay, and one of the ways that you can see where the waves are happening is on this pivot levels, and then we'll have support at the next one. See, we reject here, as support here, try to bounce, couldn't climb above that. Okay, what it helps you a lot is your EMAs. Okay, now we put the 9 EMA here. Okay, we put the 9. Look at how the 9, look how this follow the 9 perfectly. Okay, on the daily. The thing is, the EMAs are lagging indicators. Okay, this looks a lot nicer after the fact. Okay, at the real-time trade, this would not look like this. Okay, but you can have an idea for the next day what we're gonna do when the market closes, right? What are we seeing right now? For example, on Apple, we're a little far away from the EMA. We know that price loves to go next to the EMA. So what are we expecting here? If we lose that pivot level, cannot just go by the EMA. If we don't hold that level, we're expecting it to come in touch here around this area. Okay. By the time this comes down, this curve is going to be lower. It's going to be probably around here. That is that level right there. Okay, that 339.27 right there. Okay, don't ever forget they lag. The way you can look at EMAs is that they're pointing up or if they're pointing down, right? If they're pointing down, you are bearish. See here, the EMA is pointing down. We are bearish. Never closed above it. Close right on it, we're bearish. When it starts pointing up, we go up. It looks so simple after the fact, right? It is not that simple because things like this happen, okay? That's why just one EMA sometimes is not enough, okay? But you've had a 21 EMA here, okay? It gives you another piece of leverage for you to understand what the market is doing right now. You have two EMAs moving up and there's a gap between them. Okay, the way we trade this indicators, the CMA is the gap between the CMA. Said several times, that's how you use the indicator. Once we lose the 9, market usually, okay, it's not a norm, 70% of the time loves to bounce the first time between the gap of the EMAs, right at the middle. Okay, here was very close. We closed there. The wick is the fake, but it closed right there between both of them, and we bounce. Okay, if we had rejected the 9 here, then you're targeting here the trend line and the 21 EMA. Okay, so things don't stop at the 21, right? For example, here, right, we lost the 21. They cross, so when they cross, we are bearish, right? Gives a signal. So then you can use another one. You can use the 50. Okay, there's your 50. What do we do here? Holds the 50 perfectly right here, but then it rejects. It cannot go above the 9 and the 21 because they are crossing. And we come down and we lost the 50 here. What's our next EMA? It's the 200. You can a lot of people love the 100 EMA. I'm not a big fan of it. And the reason is when we lose the 50, we usually lose the 100 to the 200. So I just
No, I go from the 50
right.
to the 200 too. That's
Yeah,
how I've taught everybody as well.
Perfect. Yeah. This was probably the 100 here, actually. But actually, let's see one thing here. Let's test this here. Let's see what rebounds there on Apple. No, see? That's why I don't like the 200. Fake. It's trying to hold there, but it faked you. So I rather have the 200 EMA there. I always did. So I don't care about the 200. There you go, right there. Okay.
You mean you don't care about
so
the
there's
100?
200.
You want the 200?
Yes, exactly. I like the 200. So there we go. The reason we keep going because we are pointing up. All of them are pointing up. Now, here's what you need to pay attention, right? The market just doesn't go up on Apple. And the market loves, because we just said a little bit ago, the market moves in waves. The market loves to come and get this gaps between the EMAs, okay? We do this every day on the 1 minute and the 3 minute chart on our day trading, okay? If I go to Soxal, shoot, I gotta take this Fibonacci here.
Get rid of the fibs.
I did just right now. Okay, here is a perfect example on Soxal how we love. Okay, we were here. Let's forget about that. We are here. We're beautiful trend line. We come here the first time, not really between, but we bounce. We lose that. We can go above. We come to the 21. Between both of them, we bounce again, continue move up, and then we come down and we test the 50. Okay, perfect bounce off the 50. We go and we can make a higher high here, and then we come down again, right there at the EMAs, right? Closes below the 9, tries to bounce again between the 21 and the 50, goes above, fix everyone that is trying to go for another high. We never went about. This is the level that you got it. This is exactly the trade that I took pretty much today at FOMC. If you don't make a high there, we're going to make another lower low. You see that low? We couldn't make it the high. We make a lower low, and now we're below our 50 MA. And look what's happening here. The 9 crosses, and the 50 is above the 9. Okay, very bearish when you see this. When you have the 50 above the 9, this is very bearish. And most likely we're going to come down if we cannot close above it. Exactly, and test the 200. Okay, that's your target right there. And there's your 200 here. Okay, hit the 200, try to bounce. What do you look for? Where's the first EMA that comes? The 9. Look what it did. Why it goes to the 9 and reject. The 9 is just, the EMA is just an edge for you to understand where it can reject, because what we really reject was not the 9 EMA. What we reject was this here, okay? This is a pivot level, strong there. We had a gap here, and we couldn't go above the gap. Then with your indicators, you have your patterns, you have all the stuff that it can do just to help you. Because when you're in a trade, if you have 3 of your strategies there are aligned, you can take the trade, okay? Here would have been a great, if you look at the 4-hour here, look at the 4-hour. There's the 50 MA. You could never go above it. That's your entry right there, okay? Probably here, not there, but probably here to be safer. And your stop loss is above that, okay? If it goes above, you get out. Small loss. And what you target here is this here, okay? You can leave a runner or 2 just in case, and there you go, okay? Now you can look at the higher time frames. On the weekly here, what's happening right now is we just lost the 50. I'm not expecting this to go to the 200 right away, okay? I'm expecting this is a big support here, okay? We said this in the morning. Between both of them, we might even have a push here. There is your wick there. Here is a level. So we might try to push. There we are right now overnight. You see how we got that stop there? This is an important level. Open and close in the wick. So there's 3 levels there. We can bounce there on it. So if you look at the 4-hour, we're trying to create a reverse candle. Not sure if you can get it because this doesn't look pretty, but depending on this candle goes, we're right here now. We need to recover at least above the 50, above this area here, this pivot level. Then we can break structure, okay? And that's the other part that I'm going to talk about now, the structure of the market, okay? A lot of times it's not easy for you to see the structure of the market. If you are doing this for a while, I know if we go above this area, we're going to change structure. That is the 50 right there. Why? This was a double bottom here that we didn't even went to retest the neckline, how we were. We just reject right away off the 90 MA. Now, if we can close above this, okay, and with volume, we're going to test up there, okay? It's all about strength and about levels. That is how we can change the course of action right now on Soxhole. We need to go above 115, 116 and close above that on the daily or the 4-hour, okay? So we're looking, it's incredible. It's really closing above the 200 on the daily, okay? Reclaiming the 200 to be bullish right there, okay? Do you see all things align when you start looking at the charts? This gives you a really good understanding of what the market might do. See, going to different time frames, looking at different things, then you can check yourself to see, okay, am I looking at this the right way? Yeah, look, the EMA is just telling you there. So the EMAs are just supporting you with the cost. This is a big drop here, okay? We went from 300 to the 90s, okay? We need to have some relief. Are we going to get it before we get here? I don't know. Okay, no one knows. But we might, because everyone is probably waiting for this here. Like big money is waiting for this to get here. Okay, so
banana.
So that is one. So that is just pure price action. And now we're going to talk about the structure. I just talked a little bit about it. So we come and go to our other indicator. It's taking a little bit. Why is we taking? There we go. Okay, there's our indicator. Let's get this out of the way. Okay. And this indicator, what it tells you is where the market has support or resistance. Okay. This is not good because what is the indicator telling me? That we have support on the daily right there. Okay. If we go on the weekly, is around there too. Okay. The monthly probably not going to have anything there. It's down there. Okay. But let's see the 4-hour. They're going to give us different things. It's around here. The 1-hour. I don't know why it's so slow. They must be doing something on Trading View. It's always a little iffy. This after hours. We don't even have anything right now on the 1-hour. Not getting any indicator there.
Change your ETH to.
Well, whatever. I just wanted to show you guys.
Change your extended trading hours to 20 to 20, the new 24-hour, and that'll fix it. When you're on the other chart.
I'll do that later. Yep. I want to keep going. Yeah. Just lose my
no worries.
Thought process. Okay. So what we have here,
I can help break your thought process. No problem.
Here's what the indicator gives you, right? It gives you the main supply and demand, okay, resistance and support, but then gives you structural changes on the chart, okay, what I call a structural pivot level. Why is it structural? Because it just changed the structure. So you see when we lost that double bottom, we changed structure. We're going to go. We lost that. We're going to go lower. Okay. And then there's the internal ones. This is the internal one. Okay. Is my pivot level. This is my pivot level here. Okay. We bounce on it here, but then we couldn't recover. That's why it's good to have trend lines, to have EMAs, all that. We retest the trend line, and then we lose it and keep following the 90 EMA. And look at this right there. And this was already there, okay? It's not like it hit it and then it showed up. It was already there, like this one is already here, okay? So this is a tremendous amount of help. Look where the 200 EMA is right there on the, but this wasn't there, okay? This wasn't there. This was probably around here, and now it's there, okay? So it seems like it was perfect. I bet you wasn't. So you got to use the candles, the EMAs, all that combined. It gives you a tremendous amount of leverage and confidence in your next trade, okay? Then for day trading, okay, this is what I use. Then for day trading, here I'm going to switch this to the 30 minutes. and I'm going to go to SPY, for example, okay? And we're going to add the last one that I use. That is my London low. So this indicator, what it gives me is the previous day high, the previous day low, the previous day close, and what we did after hours, okay? The Asia high and the London high and London low and Asia low, okay? Price, so this right now is not going to mean anything because we haven't really closed the session. The only one that is really important right now here is previous day close, previous day high, and previous day low. The other ones are that we're still going in Asia, right? But this gives you a pretty good indication combined with the other ones. What do we need to do, okay? I use the previous day close. I don't have VWAP here. I use VWAP a lot too. Once we, this is what I use on day trading. If we are above the previous day close, and if we are above VWAP, I'm going to be bullish, okay? I want the I am expecting the market to continue to rise, okay, until we get to certain EMAs. If I get in here and I hit the 9 EMA right there at this level, I'm trimming here, okay? And then we hit the 21, I'm trimming more, okay? Or I'm exit, depending on the market is. If it's very volatile, I'll exit everything here, okay? If not, I might go to this resistance level here. It depends how the market is, but the previous day close and VWAP with EMAs, it will be my indicator or indicators in this case to be bullish or to be bearish, okay? And then what are you looking for? You're looking for the London high that can get there, okay? And previous day high. But usually when we go like this, we go in waves. So if we reject here, okay, your stop loss should be at the previous day close, maybe a little bit below. And what you can do is, I do this a lot. When it comes here, if it bounces and you didn't sell everything, you add to your position, okay? You made money there, you pocket it, comes down here, you still have some runners. And if you see the bounce, you add. Okay, there's nothing wrong if the move goes the right way, the market to come and retest it and bounce it again. Okay, previous day close is a very, very good indicator for what the market is going to do, if it's going to be bearish or bullish. Okay, another thing that you should put on your charts is the Friday high of day and Friday low of day of the previous week. Guys, today we let me see one thing here on my other chart. It was yesterday. Yesterday, we went to Friday, low of day, and we couldn't get above that, and we rejected it. It was incredible. So those levels are very important too. There. Anything? Yeah, went through all of that. Okay. Now let's see a live example of what happened, for example, today. Let's get here on the 15-minute. Actually, I was on the 5-minute, if I'm not wrong. Okay, there we go. Okay, here is our trade, for example, on SPY, right? This massive short that some dum-dum got out super early, right? I got out here at the 50 MA, waiting for the bounce.
It was worth the effort. It was worth the effort.
I know. This was insane, man. Okay, so we are here, guys. We got the long, okay, and I was just seeing the recording. By the way, that recording is very choppy because I know you were trying to put the voice from the Fed meeting, and it's just going all over. But I was short here. Where are we? Okay, we got 130 my. Okay, I was short here. I thought we were gonna go down. I lost here, and right away we couldn't get below. Okay, the image didn't look like this. I switched, and I went to the upside. Okay, we made 20% on the upside. Okay, we sold around here, London high. I missed all that. Okay, I get into a short and I sold everything and was upset and waited for the market on the 1 minute to go there again. And when I saw this 5-minute candle, okay, do you see here? This was our, where is it? There, right there. Here, this was our previous day high. This was our previous day high. Do you see? This was my indication. And I told everyone, I don't think we're going to go above 642.50. Okay, we did 642.67 that week there. And this is why I got into that trade, because we fail to make a higher high on the 1 minute. I'm not going to do it because then I need to swipe out. But on the 1 minute and the 3 minute, we had two candles that couldn't make it. And this is why I got in here. Okay, rolled all the way down here to the 50 MA, and then I exited. And that was a mistake. I got this wick here. Do you see what I had my stop right there? This wicked me out. This candle here, and then we went all the way down. But it grew this A+ setup right here. Okay, Banana was making fun of me that I was just trying to guess the market, but we were spot on there. Okay,
I think you were on.
Why?
I want to say you were on a 1 minute because we had the.
I was on the
candle.
1 minute. Yeah.
Yeah.
I was. I'll
Yeah.
show you here. I'll go here. Okay. Here's the 1 minute, guys. Okay. Here's the 1 minute. This is exactly what happened
Yep.
here. Okay.
That's the play.
This is it. I shorted here and I sold here the first time, and I didn't want to sell everything. I want to keep some runners. By accident, I sold everything. And it comes here. I was like, oh man, I sold everything. And then we have this fake, right? This fake candle. And the next one doesn't close above it. As soon as I see that, I enter here. Okay, I enter right here, and we go to the 50 all the way here. I sell everything here. How was it? No. I think I can't recall. I sold everything around here, I think, and then I got knocked out there. That's what knocked me out there, and then it came all the way down. Right here on the 50, I think I sold everything here. How was it here? I can't recall. Well, whatever. We made 100% trade there, 123%, while it could be.
You sold on the 20, and then you sold on the 50.
Yeah.
Religiously, which is good. That's what you're supposed to do. You take your profit, and you smile
and get
about
out.
it. Yep, that's right. When you're scalping like this,
patient.
No, you did very well.
This didn't look. This looks a lot better. That's why the AMAs lag, because we never saw this at that moment. Okay, but the entry was the most important thing that I wanted to show you guys right there. This is the 1 minute. We see the candle. This is the manipulation to upside, and when you don't see the continuation, that's your key. And your stop loss is going to be right here. Okay, a little bit above that one, because we could have wicked there and then reject. Okay, so all of that, because if I go on the 5 minute, this that we have here was already there, guys. Okay, this indicator was already there. This. Okay, where is it? Right here. This indicator. And you guys can go on the live. We were recording it. This was right there. We hit to the top, and that was what gave me confidence to get in there. Okay, I constantly keep switching between. You cannot live on the 1 minute, guys. The 1 minute fakes you. So when you're trading, you want to day trade, you gotta switch between the 15, the 3 minute, and even I look at the 4 hours a lot to see where the candle is going. Okay, so you gotta switch between them. On my other screen, I have all of the time frames there. I need to be switching. Okay, I have them on another screen, all of them there, so I can just look at them. Okay, if you only have one screen, you gotta keep changing. So let's say, for example, right now here on SPY, right? How would we trade this if we were getting into a trade? First line of resistance right here. Okay, well, I would say the first line of resistance is this wick. but you have the EMA above, so we can go to the EMA, right? This is what I would, if I was trading this, playing the bounce here, okay, trying to reverse candle, never went below the close of the candle. There's your indication to go, okay? And then this is where you trim on the 1 hour, if you're looking at the 1 hour. Right here, okay? Or you exit if you're fine, wait for the drop and then the bounce. Then this is your next level, okay? Right there. You fill the gaps, okay? And you see how far you can get and the lower time frames. You see how this is looking, right? Look, the 9 just crossed above the 20 and the 50. This is bullish, okay? Here, we're going. Can we go straight to the 200? I'll bet you that we don't. Okay, we're going to see this tomorrow morning. That we come here, this level, where that wick is 2, we get there and we reject to come and retest again the gap and then try to bounce, okay? We'll see what happens there. So this comes with a lot of hours of trading. This comes with a lot of journaling. This comes with a lot of looking at the charts and how price works. Look, the gap, do you see here what happened here? Gaps above us, we fill the gaps. Come all the way down. Now are we going to fill the gaps? Look, if I keep going, the chart to the left is your best friend. Don't ever forget that. Okay, gaps between the EMAs, what happens? Boom, we fill the gaps. Gaps here, we fill the gaps. Every single time, the market loves to fill gaps. I can keep going on and on, okay? And the bigger the gaps are, the bigger is your chance of making money. Look at the gaps here. Look what happened. See? I'm on the 5 minute. I can go another time for it. Look at the massive downside. We keep falling, completely going on the 21 and the 9. Never, when we try to bounce, we can't. Okay, this would be a great entry for shorts right here on that rejection. Look how aggressive that is. Okay, and we come all the way down. Okay. And then what do we do? There's the gap to the 200. We go and we fill up the gap. We fill up the gap. We can't go. We come down again. And then we bounce, we cross them, there's gaps to fill, we come down. Guys, it's incredible how the market repeats itself. I'm in the 5, I could go to the 1 hour, I could go to the daily, and then you will see this constantly. The algo and everything fighting the EMAs. Look at here, big gap here, right? We went to the 200 almost. We actually did right here. Double top, comes down, right? There's the double bottom. We wick the double bottom, and we bounce again. Wave, wave, wave. And then you do have your patterns to help you, right? This is a flag here or channel. Once we lose the channel, TP1 here, there we go. We try to bounce, we can't. My favorite one is on going on indicators channel is you lose the trend, you go retest the trend, and you reject it. Look at here. Look how this worked perfectly. If I go, you lost the trend, right? You're here. You bounce, you retest the trend and the 21 EMA, and what happened? You reject to make a letter lower low. That is your other TP. Goes there, okay? Final TP is always the origination of the channel. This one here, okay? Went a little bit lower, loves to do that, and then try to bounce. And then that one was again your resistance level. Faked it, another bounce, because we couldn't make a higher high. What are you gonna do? Make a lower low. There's your lower low. Okay. Once you understand the mechanics of the market, you'll have a great edge on it, okay? The problem with this is it's very easy to look at this, but when you're in a trade, all these wicks and all these fakes can be thousands of dollars, okay? And it will just wait, you'll just get out. But the market always gives you indications. Look, This here is an indication right here. Okay, we do this every day. This here, low, higher low, is an indication that the market is sustaining the low. Okay, you can get in here on a long, right? Especially on this one, when it bounce, you can get in a long, and your stop loss will be here. Okay, and then look what happened. All that wick there. Look at that fake to the upside there. Okay, massive trade. There's three things here that is happening. Reverse candle. Okay, we make a higher high than that candle, and then there is your acceleration candle above the EMAs, and then price holds the EMAs when they're crossing. Okay, I can't go to the 1 minute because then I need to go too far, but the 1 minute would probably have showed you here. Okay, and this is the problem. This is what people get cooked. This is when you lose, right? You get this wick here that you think you're going to continue, and you never waited for the candle to close. And look, it closed right above that low. So it means you're going to go up. Okay. So again, writing the EMAs, there's a gap, we go fill the gap. Same thing here, writing the EMAs, we're leaving gaps below us. There's your 200. Look what happened here. Boom. This is probably over the weekend, Friday to Monday. Yeah, there's Friday. There's Monday. Weekend gap to the downside. We gapped right there. Boom. We filled the gap between the 50 and the 200 below there. Then we try to go above the 200 and the 21. We can't really go. We can't reclaim the gap. We reject right at the gap, and we come down. We make a double bottom. We bounce, try to make a higher high. Okay, here you think you're gonna go. This is a fake. This is a big fake because here you cross and you think you're going. That's why you need, if I go to the 15 or the 30, it's gonna show you a different story here. We probably never closed above this, okay? And then we come down. But look at this. I keep going to the left. You see the EMAs? Look at this. Boom, bounce. You see how we fill the gaps? This is the story of the market, guys. I love the EMAs. And then in conjunction with your structural levels right here, pivot level, structural level. Again, structural level. What happens here when we lose structure? We go lower. Okay. This is very, very important. Look what happens here. We can go above this. Boom, come down. I really love this. This one here, look at that. 760 was your top. Okay. I don't know if this one was there already. I can't recall that. Okay, so that might be after. That indicator might be after. Okay. I don't like this at all on the daily. Look where the support is on SPY. This is scary, guys. Okay, I don't like that at all. And you look at the weekly there too. Okay, there's levels here that I have before. That's ugly. See? So I don't trust that. But here we go. There's the wick. You see, there's your low. There's your support there. Okay, and then you do something that helps you a lot. Okay, because the market always has support and resistance levels. Okay, and I kept talking about them every day in the morning. Okay, I said 755 was a big level. If you couldn't go above it, we're probably going to come down. Look, 755.78. We couldn't go above it. We come down. Okay, after 755, the next level for me was between 750 and 748. Here's your 750. Here's your 748, right? We lost that. After that 745, 750, 745, my next level was 740 to 741. Okay, right here. Okay, it's showing us 743, but that was it. Okay, we tried to hold it. We lost it here. Okay, we lost 741, 740. I said that we were going to retest the 736 level, 735. Where do we go? Right here. 736.93, 735.93. Okay, and I said it this morning. If we lose 735, 736, the next level is 732 because it's here. Okay, this one here, around here, this gap, we lost that. Now we're trying to overnight. We're trying to reclaim 70. This is very important for the market to hold this 732 because if we lose this 730 level, we're looking around here, guys. 722. Okay, 724, 725, 722. That is our next level. Okay, so you need to understand what are the levels of support and the levels of resistance. This helps you a lot. All the levels that I mentioned are here. Okay, and then you got to do your own levels too, because you just don't need to trust indicators. You know how to chart as well. See, that's a big level there. Okay, you gotta hold this now. And that was another big one. So the structure, look, every pivot level is marked there, which helps you. If you don't see it, it will help you to identify them. Okay, and then the market moves in waves and higher lows, lower highs, all every single time, right? There's our high, okay, lower high, almost equalize, comes down, made a lower high, and then once you start, what does it change when you don't make a lower low? Okay, there's your low, you made a lower high, you're fake, and then it goes, this is a big fake, because it makes a lower low, and it bounces to make a higher high there. Okay, that's the things about the market that are really, really tough, right? To navigate over. The market is full of fake things. But that's it, guys. That's how I incorporate my indicators, and that's how I try to find levels through the EMAs, through my pivot levels, my supply and demand, my trend lines. It gives me a lot of help in the market. Okay, even just this trend line on SPY right there, those two, this is where I think price can reject. And if we don't go above this, we'll continue the downside. Okay, this is the daily. There you go. It closed below the trend line, couldn't reclaim him. It wicked almost perfectly to the other one. Okay, this was our pennant that we just lost. Okay, this was a fake to the upside. Tried to bounce off the pennant. We couldn't. They're coming down now. And that is almost like we lost that one there. Now we hold it because we're here now. That's the double bottom there. Do you see that this pivot level? Okay, right there. Swept it aggressively today because it's all FOMC, and let's see if he can hold it. Okay, that's that 730 level, 732 level that we need to hold to continue. Okay, this is an ugly candle though. Okay, guys, almost 50 minutes of this. I hope this helped for you to understand the indicators. I can tell you these indicators are probably the simplest indicators that you can have in your chart that are so easy to navigate. It's so easy to understand and to set up, okay? It can get a little choppy with, not choppy. It can get a little confusing with them on the chart. Don't ever forget, I love this on TradingView. I think I swim at this. You can come here and boom, there you go. Everything is gone, okay? And you just see the price action. What are we doing right now? Always try to do this every day. Just look at a chart with a naked eye on it, with a naked view, with nothing on it. Just pure candles up and down, okay? You will easily find where you have support and when you have resistance. That's it, Banana. He fell asleep.
Oh, what?
Oh, he's muted.
Where am I? Where am I?
Oh, there he is.
There I am. All right. Thanks, Ginger. I'm gonna share my screen now and just go through some of our other ones that we have so that everybody can see the indicators, all the indicators we offer. So if you go into TradingView and you pop on this indicators tab, you will see we have a couple things in here. I favorited everything that we have. This library just has some functions and tools from higher powers in order to make Jinjas and some of the other indicators we have run easily. Then we have our London Low. This is the indicator that Jin just showed you already with the London High, London Low. I have that also incorporated. It's built into our consolidator here on the bottom too, so you don't need to duplicate that, but as a level 1 type tool, that one is separate. Then we have, I'm going to skip around a little bit here in terms of how we use these. We have our, let's go to the first simple one, which would be our, where is it here? I want to find the SMA indicator here for you guys. Oh, Lasty, Time Hopper, high low level 1, 3 points. Okay, let me just do it this way. So I'm going to pull up the Time Hopper. This indicator, when it comes on here, is going to show you all of our SMAs and all the levels that we have. There's a couple quick settings that you can do here too. We're shifting over to 24-hour charts. See this bottom right corner here. We are going to be ADJ on. This is adjusted for dividends, 24 hours now. We're no longer going to be looking at regular trading hours and extended hours in the short time frame. I'm just trying to get confirmation on one of the change. So when we just talked about before with Jinja on the SMAs, he was showing us how easy it is to add them simply there. What we can do now, what we have the ability to do here is go to a chart and we can put SMAs here from all different time frames all on your chart so that you can see them, whether they're daily SMAs, whether they're hourly, 4 hour, anything you want, you can put on here. And let's show you real quickly how you can make those settings. You can run EMAs if you want to run EMAs instead. I like EMAs for short time frames. I like SMAs for higher time frames. And then you can go over here and you can select what we are. We're on a 4 hour chart. This is for SPY. So here we can just click that plot button, and that's why these are plotted here. That's the 9. My 9s are white, my blues are 20s, my yellows are 50s, the 200s are pinks, and the 370s are orange. And those color codes correspond with you over here like this. You can plot whichever ones you want to have on here, or you can take none of them. The other thing that our MA indicator does is it can give you the angle of the MA, so you could get an understanding if it comes from a different time frame. For instance, this W9 here is the weekly 9 EMA. It's got a down slope at a negative 62-degree angle, so you get a real kind of understanding of that. And then you can do what I have just created here is called a try session here, which gives us the ability to put the regular trading hour 4 hour, 9 and 20 and 50 on a 24-hour chart or extended trading hours, etc. I will explain to why that's more important later, but I added this little button in here, which actually takes this off of the screen this way, and it puts it in a very subtle way off to the side on top of the current candle, so you can see where those MAs are without distracting everything else here. And then you quick scroll down to the bottom, you can see this overlap distance. You see how some of these have slight angles on them. You can drop that down to condense them. Down to condense them so that you can have them all share more space. If they're cluttered on top of each other, it's a real simple setting. See these overlaps to undo with this right here. So that's just going to separate them out. You could turn this off altogether to get the native look, which will then give you the ability to just kind of let them overlap and do what they do. But I kind of like having my charts a little neat, so I separate them out a little bit, getting a good understanding. At one point, you'll realize that actually having your charts in that same pattern isn't exactly necessary to have all the pieces there. Hey, Ginger, I lost you. Did you disappear? Oh, okay. I lost your camera. I don't see you anymore. Okay, no worries. Um, and I got you. Now I know. I just want to make sure it wasn't going wrong. That's fine. No, okay, cool. And so that's it on the time hopper in the very briefest fashion. I just want to show you guys a little teaser of them as we go. I'm just going to mute that one for a second. I'm going to go to the next one here. The bigger one here is called the consolidator. What I've done with this particular indicator is I've taken all of our high-low indicators and added a oscillator with volume and get some spacing. So this one looks massive when you put it on all of a sudden. You've got all this stuff going on here. But this one's really easy to tune too. We just open that up. The top thing here is showing you how much time frame. This says 7 days right here. That's 1 week. We can change that to 2 weeks on a 4-hour time frame, which is my favorite preference. That now you can see that's a 2 week. And all that's saying is, and just briefly, and I'll come back into the settings, this particular candle here represents 2 weeks of trading on a volume on a candle side, and then all the volume per price is here. So this is what that oscillator looks like. So instead of having volume on the bottom to show you what time they were, you can also have volume to show you what price there is. That price volume here also comes with what we call point of control, which gives us the actual heavy weight of that. You see a POC here. It gives us the heavy weight of where the majority of that was spent. So we can see all of that in here. What else is in here? Well, I folded in the China high and the London low that Ginger was showing you on his one. That's all tied right into here. In addition to having just about any other time frame high lows that you would want in here, we just pop in here real quick and take a look at those settings. So all the way down to from the 15-minute all the way up to a year, we can have the current and the prior high low for those periods. Why this gets interesting is you can use these lower time frame high lows when you're on a scalping on a 1-minute chart, really zoomed in, or if you're trading longer higher swings, you won't need any of those. You can turn those off and stick to the higher time frames, and you can cut it down to whatever makes the most sense to you. We also have prior day open, prior day close, all-time lows, all-time highs, China high, London low, like we showed before. We have VWAP on here, and then big ticker display. That's just so that we all can see what I am doing when Banana is sharing his charts, so you can see that there automatically pops on as long as this indicator is there. A couple quick key features here, so I'm going to show you as you're going. If you've learned from me, if I have taught you anything, you will understand that I like to keep my charts with price action right kind of in the middle of the screen. So I just kind of slap that right there. That is where I want my current candle. This gives me history to the left, and it gives me indicators and all the stuff that I put on the charts to the right, which gives me plenty of space to organize that. This one can be offset even further, so I can push it all the way to the edge if I wanted to, just by upping that. And then I can also take all of this data here, all right, and that also moves with its own offset here under the pivot controls, and I'll push that much closer to the outside there. Watch that move. Now that that's moved over here, you can see how it dovetails right nice and neat. We turn on our time hopper. Time hopper can occupy this space. All the high lows can over here, and we can have our London lows, China highs, everything, nothing intersecting, very clean space area to work with. It may seem cluttered, but it's very, very static. So for instance, you can kind of look at it like this. You have price action and all of that going on over here to give you your history. So that's all happening in here. Then you have your SMAs and how they interact with price action right here. And then you have all your high lows and other pivots interacting right here. And this is all in 3 separate spaces on your chart, so that at least you have kind of a clean area to see all that with. So that's how I do that. Those two, these two together are probably the biggest 2 influences that I have on how to look at this stuff. Adding in Ginger's indicator on top of this makes it all that more beautiful. I'll do that at the end. Let's see if there's anything else I wanted to share with you here. The high-low here is just a rudimentary high-low that we have for beginners. If this looks too complicated, you can just use the regular high-low. And then we have Lasty, which is a chaser, which I'm not going to go to today. We have tons of videos on Lasty, but I did want to show you guys the integration of these two together. And then I think I can then go ahead and throw Ginger on top here. And now you have all of that beautifulness right there together. So now we can see, oops, sorry, I meant to not be drawing. There we go. So now you can see how we have all Ginger's levels coming in on tie here. We can see all the structural pivots and all of that, all kind of separated out in between it. And the nice thing is that his data points that come in here with these pivot levels are mostly tie with price action to the left. So we don't have any additional clutter on labeling or anything here. We still have separate areas there, so you can train your brain to read these three indicators that are all on at the same time without getting super cluttered. Obviously, I totally agree with Jinja. At some point in time, you just need to just do this. Just shut them down and just look at the chart so that you can see it for yourself. And at some point in time, you actually won't ever need these ever again. These are guides. We built these guides for you guys so that you can understand how we trade and all the pieces, but they're absolutely completely unnecessary at the end of the day if you once you get the experience and knowledge base. There are some pieces here in terms of price action and pivot levels here that we have on Ginges that you won't be able to visualize ever, but you'll get a general understanding of the rest of it, being able to look at it. I love the data though. The data helps. You can have overload in terms of pivots too if you do too many of them. Not pivots, sorry, indicators if you do too many of them. So I highly recommend you stick with things that work. The only other thing that you'd add on here, I think if you were Jinja, would be a volume on the bottom. I don't actually use volume at all on the bottom. I use my volume here on the oscillator, but together they can help you pinpoint exact time and price for where most of the volume is. And then the next piece of information that we would love to have on here is like GEX information from options volumes and stuff like that, which I am working on to try to bring to the table for us, which I think Jinja will start salivating over once he actually understands what I mean by all that. Oh, one other thing I want to show. Yeah, yeah. One other thing I want to show you guys is. uh, uh, yep. So one last thing too, I want to show you guys. Yeah, one last thing I want to show you guys is these four blue squares that are popping on and off. If you guys are reading the daily pointers, this is that information. So what I have done is I've taken all the if-thens, so probabilities of things happening during the day, and I do this every single morning for you. So this will come up every morning. You'll have the day's date. If the date is wrong, you need to click on these three buttons. You'll see a button here that says update your code, or you'll see when you hover next to this, you'll see a purple circle over here. You click on that, that will update your pointers. But this comes from all the research I do overnight in the morning, and I publish in our daily pointers, comes from the pointers right into the script, updated onto your charts. You don't need this on all the time, but the one thing I did do with them is I put them at the key levels that they're talking about. So as price action nears one of these little blue blurbs, you can actually read it and know exactly what you're talking about. Too much information and you don't work that way, no problem. You're welcome to take them and you move them somewhere where they are out of the way, like this, and then you can just have them all clustered over here so you can read the pointers on the side and not have them actually affect your chart. I don't see anymore. It's all kind of there, but not there for me, so it doesn't bother me anymore. But it can be a little bit of a lot. I try to make them a little transparent so that you can send them behind things or see stuff behind them as well. But again, these are really designed to give you essentially trade ideas, important levels to look at based upon the data that I'm working on every day, so that you can kind of get that. So between all of that we have there. What was else in the settings here? Anything in the settings I want to? You could change your colors and everything. So you guys all know I'm colorblind, so I like to use bright, crazy things so I can see them all. But this is all it there. So between this, you are now looking at actually four indicators all at once on here, and it's not highly cluttered. But obviously, you can start shutting off anything that you don't want to have in here. I highly recommend keeping the MAs. I love this, what we're doing here with the MAs on here. You can use a simple MA indicator instead of this as well, and we have one, and it's available on your indicators package too there. But what this one does that I think is really really beneficial is obviously covering those other time frames. And if you wanted to look at the daily nine and say when was the last time that the daily nine crossed, and you don't want to switch your chart over, all you got to do is you can click that plot button right there and just wait for that thing to propagate, and that'll actually show you the daily nine in this checkered line here like this. So you can make it easier, turn the other one off first if you want, which will then just leave you with the daily there, and you can see that there. So that's the trajectory of the daily nine and where we have bounced off of in the past. You can do the same thing with the weekly, etc. So you can have all these different MAs plotted however you want to look at them, and it'll give you a really interesting way of understanding how important they are for as a lagging indicator for pivot points and the such. But yeah, this is it. This is all of it. From there, I think everything else left in the indicator is redundant, other than Lasty. Lasty's pretty cool. I love using Lasty if I'm going to scalp on a 15-minute, or actually on a 1 minute to a 5 minute chart. You can use Lasty. Take a look in the Trend Rebel indicator library. There is a great video on that. And then high-low is already tied into the consolidator. Time hopper we have there, that's the same thing. London low is tied into the time hopper as well, so that's already integrated into there. And then we have a pivot engine too. So I'm working on a revision to this one here, but basically what this pivot engine does is, and I'm going to limit these all down, is utilizing math and structural awareness. I'm able to create daily, weekly, 4-hour, daily, weekly, and monthly pivots that are formulated in the past. So these all pop on the chart. They're a little heavy right now. I want to trim them down slightly, and I think I'm going to integrate our pivots into one of our other indicators too, so we don't have to have too many separate things going on here. But yeah, that's all the indicators that we have. I do not recommend you throw everything on there unless you know how to set them up. It could be too much and too confusing. If you use one strategy with one of these indicators, that's plenty. You can actually do that. You can use an SMA or an EMA strategy. You can use Ginger's pivot strategy. You can use a high-low strategy with the consolidator. So they independently work without the overlap, or as you get more and more skilled, you can actually utilize them to help show you where consolidation ranges are and how and what you need to look out for in the future here. So really, really great tools that we've come up with, really designed around how we actually trade to help teach you guys all those skills as well. That's about all I got, Ginger. I think I did what you did, but I only did it in 15 minutes. Is that's okay? That's okay. You sound good when you talk. All right. So, Ginger, you got anything else to add? Yes. Yeah,
The
for
worst
sure.
thing you can do as a trader is trade with no
Yep.
confidence and stop where to let your trade go a little bit more. And that's what it is. And like we said, you can do this at the naked chart with no indicators. The indicators just help you to
Yep.
visualize it better.
Bumpers,
That's it.
like bumpers on a
Yep.
bowling alley. Hey, just heads up to next record.
Exactly.
Yeah, okay, no, we're good. That's good. I will talk to you about the when you drop your video, you lose your audio too. So I just realized that and put you on. So a couple times when you were talking, when I was doing the indicators, you weren't heard. So it sounds like I'm talking to myself, which is awesome. So I sound like a complete retard, but that's all good and fixed now. I know what to do with that. All right. Before we switch off, I will turn on to Soxel for a moment. There, we can close out with that screen so that you guys know what we were talking about. All right. Anything else, Ginger, or you want me to shut her down?
I am done. I
All
am
right.
done for the day. What
All right,
was an
everybody.
amazing day, guys.
Yeah,
Amazing
really
trading
great
day.
day. Thanks, Ginger. I appreciate it. What a great trading day with you. A lot of fun today, and even running some extra videos was excellent today. So, really cool.
Mm-hmm. Yeah. Okay, everyone. I'll see you guys in the morning.
See you in the morning. Thanks, everybody.
Enjoy the rest of your night. Take care.
Bye bye.
Market goes down and you lose like